Evening. Today, I would like to bring you an update with five stocks where the promoters have increased their shareholding uh, by up to 26%. So not necessarily 26%, up to that in Q4 FY25. One of them is Oswal Agro Mills. Second is Zaggle Prepaid Ocean Services. Third one is Kisan Mouldings Ltd. Fourth is India Cements Ltd. Fifth is Astec Lifesciences Ltd. Oswal Agro Mills deals in real estate and trading of goods. Apart from trading activities, lends funds on interest on intercorporate deposits, trading in mutual funds and miscellaneous activities. 5% increased holding, total holding of 47%. Then Zaggle Prepaid Services uh, provides world-class financial solution products to manage the business expenses of corporate SMEs and startups through automated and innovative workflows. Headquartered at Hyderabad, software as a service and a fintech company. Promoters increased their stake by 4%, totaling to 44% as of Q4 FY25. Then Kisan Mouldings Ltd manufactures plastic piping and irrigation products. Company has engaged itself in manufacturing custom molded articles and molded furniture. Increased stake by 4%, totaling to about 69.6%. India Cements, leading cement manufacturing company in Chennai, incorporated in 46 by Shri S. N. N. Sankaralingal Iyer and Mr. T. S. Narayanaswamy. While retaining cement over the years as its mainstay, India Cements has ventured into related business like shipping, captive power, coal mining. Purposeful synergy with the core business. Company is also a sponsor of the IPL franchise Chennai Super Kings. Promoters increased their stake by 26% with a total holding of 81.5%. Then last but not the least, Astec Lifesciences Ltd, manufacturing agrochemical active ingredients like bulk and formulations, intermediate products, sells products in India and exports them to 24 countries. Has undertaken several custom synthetic projects for its clients in Europe, Japan, US. It is present only in business to business sales. Promoters increased stake by 4%. Total holding 66%. All investment opinions and recommendations mainly are solely those of the respective experts, broking houses, and rating agencies. These views do not reflect personal opinion or advice. Stock market investment carry inherent risk of financial loss. Investors must exercise their due judgment and conduct proper due diligence. The author bears no responsibility for any losses resulting from decisions based on this article. It is strongly recommended to consult a qualified financial advisor before making any investment decisions. Some further updates. Yeah, this is the first company. Some details: 4,960 crores. Then, sorry, this is an entirely different company. I'm really sorry. Yeah, this is the main company. Oh boy, I'm really sorry. I think yeah, Oswal Agro Mills. The current price is about 77. Then this is the logo of the group company incorporated dealing in real estate and trading of goods. Then current price 77, stock P 20, book value 62.8, return on equity 0.55%, face value 10. So return on equity is pretty low. Sales, you can see the last quarter 62 crores. Then you can see uh, it seems like the active quarter where the results are really comparable in not even comparable, really something to look into. So you can see the net profit is 44 crores. So seems more like the service oriented business. Profit of 44 crores, earnings per share of 3 rupees 27 paise. So 42%, the shareholding has increased to 47% public holding, while it's 52%. The stock would be highly volatile in volume and in price as well. You will find this more more to do with the oversold zone in most times. Then moving on to Zaggle Prepaid Ocean, price down by 2 rupees. This is the logo of the company. World-class financial solution and products to manage business expenses of corporate SMEs and startups through automated and innovative workflows. Stock PE of 57, book value 46, current price 318, high of 597, return on equity 14%, face value 1 rupee. Company is reporting profits, no dividend paid. Debtor days have increased from 64 to 82. Working capital days have increased from 77 to 129, which means that the company is not getting paid in time, and it is using up resources in trying to service their existing customers. So promoter holding is increased, which is a good sign, by 4%. So these are the comparable companies. The promoter shareholding, again 34% public holding, would lead to high volatility in volume and price. The stock would again be a part of the oversold zone if there's a fluctuation and correction in the market. Then you have Kisan Mouldings Ltd, 2% down today. You can see the pipe pipes and the logo of the company. Manufactures plastic piping and irrigation products. Face value 10. Return on equity minus 41%. High of 91. Current price 44. Stock is trading 2.5 times its book value. Minus 11.4% growth in the last 5 years. Comparable industries when the company is a part of. You can see the peers, how well they are doing. You can compare their financials with this company. You can see that the sales has grown. They may be the sales is fluctuating because of seasonality of the business. Company was profitable earlier in the year, but now it turned into a loss, then again made a profit of only 40 lakhs, not meeting the expectations of the previous quarters of the business. Promoter holding, you can see 4% increase, FII is 0.54%, and public 29-30%, again highly volatile in volume and in price, would find itself more in the oversold zone. India Cements, you can see 1% down. We've been through this already, so you can see minus 7.15 ROE, 10 rupees face value, low interest coverage ratio, poor sales growth of minus 4.3% over the last 5 years, low return on equity of minus 6 in the last 3 years, cost of borrowing is high, comparative in the industry. You can see sales have grown, however the profitability is highly volatile, minus 339 crores in September quarter, then 119 crores profit in December quarter, and 18 crores profit in the Q4 FY25. You can see here again, year on year the company is making a loss, though the loss this year has reduced compared to the previous year. However, the company in the last 3 years has been making losses up to 500 crores, which is negative sentiment against the stock and the company. Promoter holding has increased to 81.5%, which is a positive sign. The volatility of the stock would be reduced with the public holding limited now down to 10% only. So last but not the least, Astec Lifesciences minus 2%. This is the logo of the company. Uh, Bulk manufacturing agrochemicals, ingredients, bulk and formulations, intermediate products, sells in India, exports them to various countries. Number of custom synthetic projects to US, Europe, Japan. Business to business model, minus 44.6% ROE, minus 12% return on capital employed. Company has delivered poor sales growth of minus 6%. Company has low return on equity of minus 14% in the last 3 years. Capitalizing the interest cost, low interest coverage ratio, book value almost 5.6 times. Some companies to compare with. You can see the sales have grown. However, the company is still making losses. Operating profit margin has improved. However, still the company has made a loss. Overall, year on year, you can see company was profitable until FY23, last 2 years, 180 crores net loss. Balance sheet reserves are going down due to the losses. Then you can see promoter holding has gone up to 70%, public holding is 25%, which is still high in volume, can lead to volatility in the stock price, and volume can be found in the oversold zone at times. Thanks for watching, friends. This is all for today. We'll connect with another video over the next week. I wish you a happy weekend. Please share this video with your friends, family and associates, those who would benefit from this information. Thank you for watching once again.